Welcome back to Balance Your Wealth. Today, we're putting some of the most popular strategies in personal finance on the table and giving our take on whether they're overrated or underrated. I'm your host, Ryan, joined by Bob, Sean, Nora, Tyler, and Nick. We're going to move fast, so let's get into it. First up are the safe bets. We'll get started with target date funds. Who wants to go ahead and kick us off?
I'll jump in here. I was just flying in the squadron yesterday, talking with someone, and they said I was in the G fund in their TSP, which is essentially just an all bond money market account. And they said I didn't even realize I was in there, but I've been there for like the last 5 years. I really messed up, so I put in a target date retirement account. Is that okay, Sean? And ultimately, it is a good, safe way to say, I don't know what I'm doing. I'm just going to put it in something that's going to be that rule of thumb. You're going to do kind of a little bit better than the G fund, but ultimately, you're not going to destroy your wealth. Now, certainly there's better strategies. And if you work with a financial advisor, they can help build a better portfolio. But in general, you're not going to hurt yourself by selecting one of those target date retirement funds.
So are you overrated or underrated on it?
That's a good question. I'm definitely going to go with underrated and say they're good for someone that doesn't know what they're doing. If you have a financial advisor and they're putting you in one, it's going to be overrated.
Got it. All right. Because see, I'm on the overrated side. I think target date funds get a lot more credit than they deserve. They're just a fund of funds. There's extra costs in there. Yes, it makes it easy for the average investor to get well diversified, but I think they're used way too often. And they're just a way that the fund companies can make extra money by having them in there to make it easy so that the 401k provider themselves don't have to do the education for all the different members of the 401k.
Yeah, I have to agree.
I'm
I
going to go
think that's
over.
underweighted. Tyler, I'm gonna go underweighted. And the reason being because I think that a lot of 401k providers, like Bob had mentioned, they don't offer everything on the spectrum to invest in. So your default may be your, target date retirement fund, but it's better than doing nothing, right? Or, picking stocks and bonds and being in a portfolio that you don't even have any idea. At least it's moving towards your retirement and at least getting you on the right track.
Yeah, I'm gonna go overrated here. I work with a lot of younger clients, and if you look at the target date funds that they get put into, there's always a ton of fixed income, no matter how far out you push it. And that's a big thing for
Mhm.
me. I don't think a 30-year-old needs to be sitting in 10 or 12 or 15% fixed income. So overrated on my end.
Ooh, totally agree with Tyler. Target date funds are way, way overrated. Um, uh, from the investment nerd perspective, I always see them tend to rebalance on a really strict calendar cadence. And just like we saw in 2025, when there's a big drawdown in one quarter, that means they could be rebalancing or de risking, because that's what they do. As time ticks on, they just de risk every quarter. And when there's a big market drawdown, it's like maybe that's not the time that you want to make that baby step toward de-risking. So I think being more, I don't know, tactical, smart about the rebalancing schedule and not so rigid is better.
All right, awesome. Thanks, guys. Moving on, and we're going to put the clock to you a little bit faster on this next one. So, gold and
Yeah.
precious metals. Who wants to kick us off? Overrated, underrated?
I'm going to go ahead and say that they're overrated. I think that, too often people get caught up in that gold and silver are like physical things that you can hold, and that's why we should invest in them when they don't really have any utility outside of being pretty metals that humans think are attractive, right? So I'm going overrated on gold and silver.
I'll go overrated with you, Bob. And one thing that I always bring up is how are you going to be bartering with gold if the world is crashing down, right? Like we want food, we want ammo. Like who's going to take your nice, pretty gold bar? I'm overrated.
I'm overrated as well. I need to get one for my desk, but just a little gold bar to hold up and ask you, is this real gold or fake gold? And that's why it's overrated because there's no way for the average person to tell, even in those bartering scenarios, what's real or what's not. Cryptocurrency, on the other hand, you can tell exactly if it's a real Bitcoin or
I'm not going to be contrarian here, but I'm going to give a little bit for the underrated. So I definitely think it's overrated. Get a little nerdy here. The standard deviation is much higher than say the S&P 500, but the long-term expected return is the same. So why would I take on more risk to get the same return? It doesn't make sense. Now, where I'll go underrated is if someone wants to put 5% of their portfolio in gold, I don't think they're going to destroy their wealth. It can be a
Mhm.
good diversifier. It's done well here the last couple of years. Certainly, we all wish we had some there. but there's also been a 12-year period since in the mid 2000s where it didn't earn anything. So overrated is my general rule of thumb, and underrated if you want to have a small allocation in your portfolio. You're not going to destroy your wealth.
Sean, stop playing both sides of the fence, man. We're gonna
Just pick a side, brother.
All right, moving on. Next one up is paying off the mortgage early.
I mean, I can take this one. I think that's overrated. I think simply put, if your mortgage, if you were the lucky one and got it close to 2, maybe 3, 4%, I do not recommend paying it off early. You're going to earn more in the market. And then there's a liquidity factor, right? It's going to be harder to get money out of the home when you keep continuing to put more money than your, standard mortgage. So I say overrated.
Yeah, I'm there with Nora. I say overrated. I see the benefit, the emotional benefit of having your mortgage paid off, and understand that that sometimes can outweigh the math of it. But there are just so many scenarios and flexibility that maintaining a mortgage gives you personally, financially, that it's not worth paying it off in most scenarios.
I'm going to continue playing both sides of the fence here, right? I'm going to go overrated. If your mortgage is under 4%, then if you won the Powerball tonight, then you shouldn't pay off your mortgage. People that are buying homes in the 7.5%, 8%, we look at our hurdle rate. If you're putting money in the market, you're not taking on a lot of risk, you're probably losing money on your house. And to clean up your balance sheet, get the house paid off early, there could be a lot of value. So ultimately, it depends on how much you're borrowing and at what rate you're borrowing it. But for most of the people that bought a house from 2008 to 2022, I'll say overrated.
I'm going to go overrated, and here's why. Home values rise whether you pay it off or not. It's one of the only asset classes like that. So again, there's no rush, in my opinion. If you have a great financial strategy and it's not bothering you too much, like Bob said, it's not a dark cloud hovering over your head, keep that mortgage and use that arbitrage elsewhere to get a better return on your money.
All right, rounded out the safe bets. We've got index funds. Let's go ahead, Nick. Yeah, I'm going to give it to you, the investments guy.
Index funds. Ooh, I'll say overrated. You only use them when you don't have access to other things. And that's why 401ks basically force you into index fund land. So overrated.
I'm going underrated. I'm going to take the other side of it, because even though we hear it all the time that even you shouldn't have a financial advisor, just buy an index fund and just leave it, right? I do think there's a lot of benefit to just tracking an index and not worrying too much about making stock bets or stock picks or doing anything like that. Just be in an equity fund and go with the flow. So I'm going to go with underrated.
I
Index
side
and
with Bob
chill.
there.
All right, Bob.
I'm gonna side with Bob there on underrated. I think a lot of people underestimate how boring is right. I think you can be extremely successful by being, boring and investing in index funds. And then I think the real magic comes with index funds is the consistency and the compounding.
Yep.
I'm also
All
going to
right.
go underrated here. Index funds, if they're good enough for Warren Buffett, who says after he's gone, he's going to have his wife put them all in the S&P 500. It's going to be hard to argue with him. The data is clear. If you put your money in index funds and you don't look at it, you don't try and time the market, you're going to maximize your wealth.
Yep.
All right, moving on to tax and strategy plays. Are these moves actually impactful, or are they getting more credit than they deserve? We'll start with Roth conversions.
I'm going underrated on Roth conversions. I think that they get a ton of press and they get thrown out there a lot. And the math on it is, if you're not going to be in a different tax bracket, it doesn't matter if you do Roth conversions or not. My big reason that I love them is I just like being free of Uncle Sam. I like releasing myself and knowing that going forward, all I have to worry about is the growth, and that money is going to be mine 100% tax free. And I think that there's too much math trying to project where we're going to be in the future with tax rates, when we can just pay the tax, move on, and know that we're out from underneath Uncle Sam.
I'm also going to go
Tell us
underrated.
more about.
I would say I'm also going to go underrated. Just kind of the benefits from people that want to pass them down to their heirs as well. You get another 10 years of tax-free growth. If you can pay the bill now, there's two things that are certain in life: death and taxes. I'll add a third. the taxes are changing, and I'm guessing they're not getting smaller. So you might as well pay the bill now.
Yeah, kind of tying into the Roth conversions. The next topic is tax planning in general, underrated or overrated.
I think it's highly underrated. I think that's a lot of things people don't focus on, and Nick can probably touch on this, but the alpha just on the tax planning side, can add up to 1-2% per year. And over 20, 30, 40, 50 years, that can really make a difference. So underrated on the tax planning side.
Yep, I
Yeah.
totally agree with that. It's one of those things where we usually can control some aspect of it, and as long as people don't just get like too intimidated to try to plan it, there's actually a lot of very small practical things you can do to really move the needle, and you'll end up paying more in taxes than you ever do in investment fees.
All right, I'm actually going to go with overrated on this. And the reason is kind of a niche reason, but a lot of times what we get is we get all these influencers that talk about tax planning and these crazy ideas that you can do to save money with LLCs and paying your kids and doing all this funky stuff when that most of those are not legitimate tax strategies and they're just ways to get people to buy into some system or pay for some course or do something crazy, right? Tax planning in and of itself is very important, but I think we've gotten to a point where people are looking too much for some fancy, crazy tax strategy that it's overshooting what we should be doing. We need it as a baseline, but we're overdoing it sometimes with strategies that don't make a difference or aren't even legal, right? Like don't make any sense. So I'm going overrated on the tax planning side.
All right, moving on from tax strategies and tax planning. Next one up is going to be dividend stocks. Are dividend stocks overrated or underrated?
I'm going to jump in aggressively on that one and say they are the most overrated thing in the history of investing. And the reason for that is company that has profits, that is just distributing those profits back to shareholders instead of reinvesting it into the company, just tells you that that business is generally going to be on the decline. So
Definitely going overrated with you, Nick. And I think this is kind of a generational shift. I feel like the older clients are all about dividend paying stocks. And to Nick's point, if they're paying a dividend, that's because they're not investing in people, they're not investing in technology, they're not taking on acquisitions and mergers. They don't have anything to do with their cash, so they give it back to their shareholder. They're generally on the decline.
All right, that one's pretty decisive, I think. Last one in this section is going to be rental property investing. Is it a proven path to passive wealth or just a part-time job disguised as an investment? Overrated or underrated?
Definitely overrated. So, people that get into rental properties, from my experience, if you have more than four, it can be a great strategy. If you've got one or two, you're going to be dealing with a lot of headaches and you need a huge emergency fund to be able to fund it all. And generally speaking, you're going to be in the red for a long time before you finally start making money. And when you compare that to, say, putting your money in the market and getting 10%, it's going to be really, really hard to kind of overcome that. Much easier to put your money in the market, sit back, relax, have a cocktail on the beach, than deal with customers calling and complain about their internet being out that weekend.
I'm going to agree with Sean that I completely think it is overrated just from personal experience. I have rented a home more out of convenience than, I guess, strategic planning. But things that you need to think about that a lot of times when people are like, oh, I'm going to rent my house and I'm just going to get this passive income. You have property managers, especially if you're out of state. You don't know who's going to be renting your home, how long they're going to be renting it. So it's kind of hard to plan when, to Sean's point, you have one, maybe two properties. But if this is something that you want to create as a career, is it a passion for you? That's something different. For someone out of convenience, really doesn't have a plan, but would love to see more income and see it as more passive, think a little bit more about how much work you want to put into that.
Yeah, I'll jump in and say overrated as well. Just one point, as Bob mentioned about tax strategies, real estate has been glorified all over the place on social media. I hate the word passive. Nothing is passive. And so everyone I've known that's had residential rental properties has sold them. So they don't like the headache. The margins get real thin depending on what type of properties you're working with. Water heater goes out. Okay, there goes my profit for 6 months. It's just not a fun game to play.
All right. I think it's
I'll take the flip side. I'll say that rental properties can be underrated because they're one of the only investments where you get basically an infinite amount of leverage to invest. Like nobody's going to give you a mortgage size loan to go invest in the stock market, even though the stock market has probably done better, has done better over the same time period. So just because of the leverage opportunity, I think there's still good chances to make money if you're willing to put in the work.
all right. Great conversation so far, guys. Going a little longer than we expected. So we're going to go ahead and break this into a part 1 and part 2. If you're enjoying the overrated, underrated series, join us again next week for the second half of this recording.